Hey, good evening. This is Trader Tim from E-mini Mind. Today's Thursday, March 9th, 2017, and I wanted to do a video highlighting today's hammer that we formed on the E-mini S&P. As we came into the week, I was talking about a couple of scenarios. We could either pull back just a couple of bars and then reverse, and the reversal that I was talking about was going to be initiated by the break of the high price of that candle. And you'll notice on this move down, we have not broken the high price, and this is just trading hours only, of the candle, of any of the candles on this slow, choppy, kind of lackluster week in terms of intraday trading opportunities. But we have now come into the 2350 level. Not only did we come into it, we came down to it, and we've bounced back to the top of the range. I highlighted in Monday's video this 2350 to the 2365 as an area to watch for us to perhaps dip into and then start to rally out of. So now that we have the hammer formation today, going into Friday, I'm looking for a break above today's high. And that could come in the form of a gap up. And if it does, if we gap up at tomorrow's open, then I'll be looking to take the first 5-minute bracket setup. And that could be a good opportunity to get into potentially a new trend higher. If we draw from highs to highs, we can see that, kind of this 23.4875, right around the 23.50 level as the extension long. So if we don't break today's high, then drifting a little bit lower, perhaps dipping down below the recent swing low of that actual low of 23.5150. Sometimes dipping into a low, and then you'll get this same scenario where the market closes at a hammer formation because buyers step back in. But in the meantime, tomorrow I'm looking for a break above today's high for a long setup. You'll notice if we look at today right around lunchtime, noon session, the market started to make very, very extreme low ticks in the minus 1200 to 1300 range, certainly well below 1000. And at that same time, the market was selling off. We formed the low of the day here, and that's what initiated the long, were this kind of cluster right around 12:15 of low ticks. And you'll notice that the market was moving lower, and once we had situations here where, zoom in a little bit, we've got a low tick, and then we have a low price. And so as the market continues downward, it wasn't until about 12:15 that we had a more significant bounce. So as we were coming down, we kind of moved sideways late morning and then started to sell off. And as we were selling off right around here, the market started to make the low ticks. And at 12:15, when we made another swing low, the bounce was big enough. The bounce back here was only one candle, and that's the great thing about the Heikin-Ashi candle chart. You can see, okay, this trend change was only good for 3 bars. The trend change was only good for 1 bar. Well, down at 12:15, we had a much more significant bounce, and that led us into an opportunity to grab from that low to highs and place an order at the 50% retracement. And from there, the market took off and closed in its hammer formation. So when we get these low ticks when we get these swing lows, and when the ticks start to get very, very extreme, I'm looking for an opportunity to get long as the market's coming down. And you can turn that upside down. If the market was spiking in plus 1,200 ticks and the market was moving higher, I'd be looking for a high tick at a high price to then be shorting. And it's just a matter of taking the first setup that occurs on a significant pullback. I'm not going to be using this one candle bounce and drawing a retracement that's barely a point wide. It needs to be a little bit more significant bounce than just one or two candles. But that's looking at today and kind of having the week finally fulfill what we were discussing on Tuesday in the live trading room, as well as in Monday's video. So looking for the market to potentially round out tomorrow and break for the first time in 1, 2, 3, 4, 5, 6, 7 days. Looking for the market to break its previous day's high. So we'll see if we can do that tomorrow. If not, then we'll be looking for next week to continue that trend and looking for a break of the previous day's high. So I hope you all have a great weekend. If you have questions, shoot me an email, and I'll get to those over the weekend, Tim, at eMoneyMind. And if you're interested in the following along in the live trading room, you can check that out, eMoneyMind.com/VIP.